So I know you track insider buying a lot. What is insider activity? Why is it so important to track?
Well, it's important to track because who knows there are different types of insiders that matter. So let's just define insiders at first, right? So you have your CEOs who obviously run the company. You have the CFO, who's the chief financial officer, knows the balance sheet better than anybody in the business, has on their screen every day what the value of the price for the stock should be at any given moment in time. You have the COO, who's the operations chief. You have the chairman of the board, other chiefs within the businesses like marketing officers, the president, the vice president, and board members. You also have 10% owners. They have to file with the SEC. And then you have other individuals who might be just hedge funds that have been buying the stock and accumulating shares over the years. My focus heavily is on CEO and CFO insider buying, particularly at levels over $100,000. We know that is effectively statistically significant. And then in the world of insider buying, there is no, from an academic perspective, a bigger exploitation of value in the financial markets than when insiders buy their own stock and the time period before the announcement of that insider purchasing, because these executives tend to know at that when they step in and buy it and they're looking out 6 to 9 months that they believe that their shares are significantly undervalued.
So you mentioned there's a lot of different parts in this equation, right? A lot of different variables, but the CEO and the CFO seem to be your favorite. Why is that?
Because nobody knows the future of the business better than the CEO of the company, and no one knows the balance sheet and the perceived valuation of the stock price and what it should be today versus what it might be. So there may be a figure on their sheet that says our stock should be worth X dollars, $20, yet the stock is pulled back because of things that are out of their control, and it's trading at $15, $12. And then what they do, they buy the stock with their own money. This is a really important thing here. When they buy with their own money, they're taking capital out of their own bank accounts, and then they are purchasing shares and then filing what is known as a Form 4 document with the SEC, which we monitor on a daily basis at Flashpoint Trader.
All right, so at Flashpoint, you get some insider activity across your desk. Are you automatically trying to mimic the move?
No, typically what I found is it's more ideal to try to trade some of this stuff in a positive momentum environment. And there has just been so much chop recently in some of these, in a lot of names, that it has been difficult to do so. But I will remind you, for the long term, if you look at companies, so for example, there was a significant amount of insider buying on Plains GP Holdings, which is a pipeline company. There was a lot of insider buying on companies like Albemarle, which is a lithium company. Tyson Foods just had a $500,000 insider purchase. When you pull back and you look at some of these names, some of these stocks that you probably want to own for the long term, and Albemarle is like a very good example of a stock that is going to do rather well in the future, you would believe, because of the trend around lithium demand. So if we pull this up and you look at the CEO and the chairman and the CEO buying the stock at 181, after there was a lot of selling back at 332, 220, 255 earlier this year. This pullback that we've seen, this is coming from the 8th, 181 and 182. What does that do? It gives you a floor, because this is where the executives are stepping in with their own money and buying the stock. They perceive it to be a value at this point. And the only reason that insiders buy is because they believe their stock is going to go higher. That's a quote from Peter Lynch. It gives you a chance to kind of set a floor. And if that's the case, if it pulls back further, mentally keep in mind that level at 182, maybe this stock keeps pulling back because of macroeconomic events. Keep in mind that once we kind of turn a corner, you can buy comfortably back up at around up to 181, because the executives found that to be a reasonable place to put in $1 million of their own money. One last thing, if you want, you could sell put spreads and go down 10, 15% lower than what that executive is purchasing the stock at. And if the stock does pull back, you're going to buy it there. But if the stock does turn around right away, then you're going to make money from the devaluing of that put spread as those put prices move lower. As the stock moves higher, you would simply close that position and keep the premium.
right, so there's a couple different strategies that you guys do there in Flashpoint, and I imagine you don't just get on your desk and get to your desk, and all of a sudden there's a list of insider activity. How do you find these insider moves?
I get an alert whenever the
You
thing is.
really?
I get an alert,
That's
and
awesome.
it's, yeah, I mean, it's, again, this is all public data. It's just a matter of being able to sort it and do it relatively quickly. So when we have a sizable insider buy, I share that both at Hypermomentum and at Flashpoint if it is significant and it involves the CEO and the CFO. This is something we started doing last week.
Oh, nice. All right. Now, how does momentum play with this?
So the momentum concept here is really important. Now, this market has been absolutely wonky going all the way back to February. We did have one sizable negative momentum event, and that was the banking crisis. That was a big pullback in the financials and energy, yet it didn't really feel like it because the SPY didn't go back to the lows of the year. But when momentum is negative, it is, a lot of people will sit here and say, well, there's just more sellers than buyers. That's true at the onset of this, but typically when we go negative and it starts to accelerate downward, that's a lot of institutional selling. We sometimes don't find out why or what that event is that's driving it until a week, 2 weeks later. And in the case of this, our biggest drops back in 2018, December 2018, we fell 20%. So momentum went negative, not really a time to step in and try to significantly buy a lot of things. Same thing happened with COVID, right? Back in February 2020, we had a 33% drop. Really didn't feel safe buying back in until around April 7th or making any trades to the downside on April 7th. But it's really critical because the one chart, Vaz, that is so utterly important that a lot of people don't even know exists is this. And these big negative momentum events that have transpired over the last decade, you had the COVID event, you had the China event in 2015, here's the 2018 bond crisis, spasm, and then ultimately that 20-point sell-off. Up here, that's where executives are buying their stocks. And what I'm pointing out is they have not been buying in droves here. When this crisis and this market has effectively found its bottom, or at least a big shift in confidence about the economy moving forward, you're going to see a significant amount of insider buying all at once. And that will likely be in a negative momentum environment. So you can effectively try to front run a momentum shift because there's typically a big policy shift that accompanies this. And trust me, executives have spent a significant amount of money, particularly hedge funds, spend a significant amount of money sniffing out policy changes in Washington, focusing on what's happening with fiscal policy, focusing on what the Fed might do, listening, to try to find out if there's any closed door meetings between the financial officials and the other individual agencies that might have to provide liquidity support to something. They find that information out, and boy, do they end up buying at a perfect time, right at the bottom.
Exactly.
And then ultimately, how else would in late March 2020, early 2020, would so much insider buying have occurred when there was still so much uncertainty around COVID? It was because they had a pretty good understanding moving forward that there was going to be a dramatic shift in monetary policy, and sure enough, there was announced by the Fed adding trillions of dollars in liquidity to the system. So pay very close attention to that chart. We have that chart in our morning brief every single day, because if this thing really starts to spike at some point soon, it may suggest much calmer seas and a more liquid market moving forward.
That's great, Garrett. That's great information that you share with your members.